Kim asked me over the weekend about the most common question that she gets asked, pretty much along the lines of, where do I start? Where do I start, which is the biggest single question. And of course, you know, the challenge is, like everything about where do I start, is you start wherever you like. And this is the challenge we've always found in the retail space, is that a lot of people ask that same question, and there is no particular starting point. It's just about the fact that you've got to cover everything by the time you finish anyway. So you've got to start wherever you're going to start. It could be with the order flow, it could be with the value narratives, it could be with structure, it could be with any part of the process. But Kim thinks that that's not good enough. She thinks that you need to know a little bit more specific about where is a good place to start. And obviously, again, I still struggle with that as a question. And the reason why I struggle is because a lot of people come to this this classroom from an order flow background. Some people maybe come from a fundamental background, trading Forex, for example. So the starting point for everybody is going to be slightly different. And everybody's still got to learn all the elements before they're ready to kick off and get into the trade. So it's still very difficult to come up with an answer. So I was giving some thought about it, and the key thing, I suppose, is to simply understand the very simple process involved in market structure. Because if I can't figure out where the start is, because obviously everybody's going to start from a different location, perhaps we can figure out where the finish is and work our way back. So that's what this is all about, is to try and figure out where the finish is, and then to consider, how do we get there? So one of the key aspects to figure out where the finish is to think about, and we're not talking about your trading journey, we're talking about individual trades here, of course. So the key aspect to any trade is to understand some very simple concepts. We have a previous day's market, for example, here. Very simple market. And we then have this break, which is either the 1 hour in the overnight session, or whether it's the cash market close to the cash market open, doesn't make much of a difference. So when we start out today's market, there's a couple of really important trade levels. And these are locations where we start thinking about the finish. And the locations where I'm now thinking about the finish is now this location, which is the previous day high, and this location here, which is the previous day low. Now, why am I thinking about those as finishes, as ending positions? Well, because this is where commercial liquidity is located. If I want to be a long position, if I want to build a long position, then these are the two locations that I'm going to be looking at specifically for entering and exiting out of that trade, right? Why? Because these are the two locations that have the most liquidity probably in the charts in terms of individual spike volumes, not necessarily the most liquidity in terms of the total volume, and that's where I suppose some of the challenge is. But at least it's a good starting point to work our way back from, Sebastian. You understand that? So what I mean by this is that if I'm bullish for the day, this is my target price here. If I'm bearish for the day, this is my target price here. It should be a relatively easy idea here. So that's a good starting point. We now have an idea about where we're going. The question is, how are we going to get there? And obviously this idea about trying to find and understand this is very, very important, because what happens when we get that liquidity? I don't know. If the value is bearish, we're probably going to be selling it. If the value is bullish, we'll probably sell it and then buy it back and then, let it rip again. But these are the good starting points. Because when these are the good starting points, it opens up the door for me to now consider whether I'm bullish or bearish. So let's assume that we have a market that has limited value narratives at the open. And let's assume the open does something like this, or the market does something like this idea here, and it's going nowhere fast, okay? So we're kind of in a neutral, what looks like a neutral market. Now let's assume that this is where we have a big advantage over everybody else, is that let's assume that inside of that neutral market, I start seeing a value line that was working its way down beautifully. And then suddenly the value line does this. Now you've already got a really good idea about what you're thinking, aren't you? So what are you thinking? Well, there's one or two things that can happen. Number one, the market can rip higher, in which case I'm playing catch up. Or number two, the market can try and jam up this trade, take it down into bottom line liquidity, and then rip higher. So there's two things that can happen. And we've got a trade opportunity on any one of them. If the market decides that scenario one, which we will now do as the red scenario, if the market decides to rip higher, the idea is that probably what's going to happen is when we take out these guys here, what's probably going to happen is that it'll jam up into that area, and it'll maybe try and trade back down a little bit here. We'll maybe get an opportunity to join in, and then we'll get this rip to target price here. And that's us. Trade's finished. Scenario number two, which is going to be the green scenario, could be something like this. The market starts out here. It kind of hangs around, buy side value. We're starting to think about this paycheck liquidity here. We're starting to think about the inside liquidity here. We're thinking about those areas, and we're thinking about the rejection of price out of those areas. Maybe they'll take it down. Maybe it'll get this nice rejection. Now, even at that stage, you don't have to be the guy that buys it. You can wait for the push away from those areas. We've got the pullback 56 type trades we could do in these areas as well. And then we're obviously now looking for perhaps this higher hold. And then we're going to be looking to see if we can get a little bit of a pop going out of this area here. And we'd imagine that these are one of the two scenarios. The trades that we would be looking at trying to take advantage of would, of course, now be the trade here, or would be, of course, perhaps the trade here, or perhaps the trade here, trying to capture any of these breaks out of this area. Now, which one happens, nobody really knows. That we have an idea which one's likely to happen from the shape of the market makers. If the market makers are bullish, then we could probably expect red scenario to take place. If the market makers are bearish, we would probably expect the green scenario to take place. Would you agree with that? So if I put the market makers, not the delta, remember this will be inverse to the market delta. If the market makers are bullish, you would imagine that scenario red is going to play. If the market makers are bearish, you would imagine scenario green is going to play. So we're already starting to get a leg up on what scenario is likely to be in play for the value that we're seeing. Now, that doesn't necessarily mean that we then just jump all over it. We still have the ability to start considering how we're going to play this. So in a nutshell, that's it. It seems like it should be a lot harder than that. But when you actually stop a second and think about that, that's the basic cornerstone of every day that we have when we set up our charts. We ask where the commercial liquidity is. We draw in the previous day highs and lows, the overnight session highs and lows. We think about where we're going to get some liquidity today to buy into, as that's a massive requirement for commercials. We think about where we're going to get some stops. We think about how we're going to play out some of these ideas. Now, for a lot of people, they look at this from an outside point of view and they go, yeah, it's a little bit too easy, isn't it? Well, we can complicate it all you like, but at the end of the day, the complication comes from the competing values, for example, or perhaps the order flow not being crystal clear, or maybe the price not giving you a pullback or an opportunity to enter the trade, and the trade's gone, and you say, okay, well, I'm not going to catch every trade all the time, and that's something you've got to remember, guys. You're not going to catch all the trades all the time. Stop thinking you've done something wrong. You haven't. Somebody just wanted it a little bit more than you do, right? That's okay. So long as it happens irregularly, not all the time, Theo. So long as you're not sitting on the sidelines watching 5 days in a row and you're saying, well, somebody wanted it more than I did. Yeah, well, some stage you're going to have to want a trade somewhere. Make sure you still turn up. So where are we going to get liquidity? It's interesting because I was asked this question about, where could I find liquidity? And it was a question about, finding retail stops and where's one of the best places to find retail stops. And I says, look, put a strategy on your charts and I'll show you how you find retail stops. So asked what strategy, as far as he was aware, that everybody used, and he says, right, stochastics is a great strategy that everybody uses. I says, right, let's put a stochastic strategy on the charts. This is just a stock strategy that's in your trading view folder, and it's quite a good example of it actually coming into today's session. Take a look at this stochastic indicator here. Now, I'm not saying the trades are right or wrong. What I'm saying is the price is right and wrong, right? The price is terribly wrong, right? So here it goes. So here's 3 stochastic trades that are generated by TradingView, followed by 10,000 people, right? So what's wrong with them? Well, every single one of them gets stopped out, don't they? Every single one of these trades gets stopped out. And yet every single one of those trades, to some degree, was right. You see that? To some degree or another, every one of those 4 trades was correct. 3 trades. So if you look at this sell trade, for example, here, and I said to you, right, well, the best thing you can do when you've got an indicator, a retail indicator, giving you a sell, and everybody's selling with that confirmation, wait for the price to drop down with the confirmation to get everybody dead excited. So some people will use the candle low, so just draw a line at the candle low, and use that as your buy price, targeting the prior liquidity where their stops are, right? So for example, there would be a buy trade there. And you're going to target liquidity where the stops are. So if that was your buy trade, for example, there, and you're targeting liquidity where the stops are, there's the stops there, undoubtedly. And that's going to be where you could then get short into it as a possible trade. How did your 2 trades turn out versus their trade? Pretty good, to be fair. So when you look at the next trade, there's a buy trade there. So obviously you're trying to get short at that price there, because that's obviously where the trade's at. And so you're going to be looking at that and saying, right, well, there's your opportunity to get short, just as you did get long here. So on a red one, it's the bottom of the candle. In a blue one, it's the top of the candle. So there's where your short is. And obviously you're going to target where their stops are. So let's assume the price drops. They all then pile in long here. All their stops are going to be below here. And that's going to be your opportunity to then buy into this as a storyline. 2 trades on every single situation, isn't it? 2 trades. Then we get a sell trade. Price goes up, breaks to the downside. As soon as it breaks to the downside, that's going to be your initial buy trade, because that's where they're all piling in long, short. So there's your initial buy trade there. And assuming that the stochastic is right, where's all their stops? It's going to be above that price there. And that's going to be your sell candle into the stops there. Now, how fascinating is this? Because obviously what you've now got is you've got a retail indicator that you've been able to turn into potentially 6 winning trades, haven't you? So the retail indicator effectively generated 3 losing trades, and you generated 6 winning trades, which is pretty good when you think about it. Looking at it through that type of lens, we can recognize that there's a massive opportunity to start picking up on some of these little clues, simple clues, simple ideas into areas where we can simply look for the fact that this is all retail. They're going to wait for that confirmation. When you get the confirmation, whether you're bullish or whether you're bearish, I've got a trade to buy into it and or a trade to sell into it. I've got a trade to sell into this and or buy into it. And I've got a trade to buy into this and or sell into this. So when I see those as opportunities, well, that's pretty good. using a retail indicator to find them. And the same is true of pretty much an awful lot of things, but one of the things you'll notice is that we're always using a little swing high or a little swing low. We're always finding those little pockets of liquidity. So this buy trade was into the pocket below that price, or you could have waited for the pivot to then come in and buy below that price. This sell trade was into that little pocket of liquidity at the top edge. This sell trade was into that pocket of liquidity. This buy trade, likewise, this buy trade here and this sell trade, they're all into those little pockets. So when we see those little pockets, you can see that these are great places for liquidity. Now, one might imagine that it's got absolutely nothing to do with this stochastic indicator. Nothing at all to do with a stochastic indicator. And you'd probably be right. The point is, it doesn't make any difference. You're still able to recognize that there's a requirement, regardless, for me to get some sort of liquidity on the buy side or the sell side, and then pick up whether I like the idea from those locations. If we were, for example, to add a relative value to any of these trades, we would be able to pick up on the sense that the trade is good or the trade is bad, but still nonetheless, even without relative value, I'm still able to have picked up 6 out of 6 winning trades by just recognizing that this is the case. From a market structural point of view, it's obviously quite interesting, because when we start seeing what the bias is, when we start recognizing where the bias is located, it's very difficult in the first two trades, because at this stage here, we haven't really set up any type of imbalance. We haven't seen really any toxic order flow. The highest probability is that the trade is probably bearish. Why? Well, because the only toxic order flow we'd kind of seen recently was, if you look in the background to this trade here, you'll notice the last sell trade we had here, but we also had that failed auction in the background. However, the last toxic sell we had was this guy here. So we can already recognize that there was a toxic seller there, but it's still creating failed auctions on the way down. So it's a very difficult first two trades to figure this out. But from that point onwards, it actually gets an awful lot easier. The trade into this area is actually a pullback into this massive imbalance coming from this press. We now have an idea that we're going to be tapping some bottom edge liquidity to some degree, because we've obviously got a break of structure, and this is the bottom edge liquidity on that break of structure, isn't it? So that's going to be the highest probability at this point, is going to be that sell trade there. The highest risk, highest gain is going to be this guy here. And you can see that this guy is now into bottom edge liquidity. And obviously, if this guy does turn around, where are they going to be tapping liquidity? Well, you'd imagine they're going to try and trade all the way back to this liquidity in the background, because that's session high liquidity. Session high liquidity. So buying into this and running back up, the highest probability buy trade you would imagine is probably going to be this guy here. Well, isn't that interesting? That the two single highest probability trades where we're looking for continuation, we never got any continuation, but we still made some really nice money. Both came from stochastics in the opposite direction. The highest probability sell came from a stochastic buy, and the highest probability buy came from a stochastic sell. Interesting, isn't it? Now, why is that the case? Why might that be the case? Well, simply because if there's a stochastic in play, there's a very good chance that the market's trending. So in other words, if you've got a stochastic sell, there's a very good chance that the market was trending higher. So therefore, the highest probability play probably comes in when everybody's trying to fade a top edge. Now, they might be right to fade a top edge, but we already know that the vast majority of top edges are open to manipulation to some degree. So whether you agree with the stochastic sell or not, it's probably still the wrong price. If you love the sell when the sells come in, then you know that the sell is going to be directly above here. So you're going to work into those angles, if you like, into those storylines there. If you see the sell coming in here, you're going to do the exact same. You're going to say, well, I love the sell, so we're going to work into the angles. and we're going to take a shot at that type of a sell side only liquidity. And the takeaway from the trade, of course, does what it's going to do regardless. So we can start to recognize the value of looking at these types of highs and lows, the idea behind these highs and lows. And obviously, today there hasn't been any of these stochastic triggers. You can see for yourself there's been none whatsoever. So when I'm looking at this, going back a step into this storyline here, let's take a look at a couple of examples. The bond is one of the best examples, to be fair. So let's take a look at the bond for today. The first things you're going to do before you even get started with your bond is you're going to start drawing out some areas. Now, the good thing is we've got our key levels on the chart before we even get started every day. So we know if it's red and we know if the market's green, blue, whatever color you want it to be. So the first things first, we can see what the color is. That gives us a good, strong idea about bias. And we can also see where target prices are. So let's assume we are coming out of this area here. It's quite obviously red. And one of the things we're going to be looking at is we're going to be looking at this and saying, okay, so if I'm just trying to think about bias from this point of view, and I've seen the cash open and it's been selling off, this is now session low, correct? Because it's the overnight session low. It's not terribly controversial. If I look in the background, you'll notice it's also previous day low. The previous day low is already came out, hasn't it? So when the previous day low came out, which was here, you'll be able to recognize that the price didn't reject the previous day low. If the price rejects the previous day low, it's going to run the sweep to the downside, it's going to come out, and it's going to start building a top right-hand hold. Didn't happen. So my gut feel is that this market is now sell side only, and we now have a simple target price. It's right there. We can all see it. Everybody would have the same target price. Ulrich and Theo, Miguel would have the same target price. So the question I've now got is, how am I going to get into that sell trade? Not whether I'm going to get into the sell trade. I mean, at this point, without any value, I'm just asking, how am I going to get into sell trades? So we're obviously going to be looking at the fact that there was a very large drive from the cash open from the electronic restart last night. So it's pretty obvious that we have a strong short seller coming in from the open at that point there, isn't there? We've also got the FOMO trade level from Friday right there. So we know that the idea is that we want to be trading somewhere in this location and targeting somewhere down here. This is our target price. So when we come into that area, the best thing you can do is start putting in some sell orders, start putting in some offers in this area. If you don't want to do that because you're still looking at it from a wait until it breaks out of this area, okay, so you put in a sell stop order then. Whichever way floats your boat, there's your sell stop order. You've just taken out a pivot price. You could obviously run that little pivot there and say, right, that's my sell order right there. And now you're in it, and now you're aiming for the bottom line price. As you trade down towards the bottom line price, there is nothing else in your view. You're now focused on getting that bottom line price. Every time you have got an opportunity to add to this on the way down, so we get a little pivot there, doesn't do much. We've got a little, quite a big imbalance coming back in here to drive down to the bottom edge. So you're probably going to be looking at that saying, well, there's a nice opportunity maybe to play this 21 short. Now, obviously, by the time we hit 21 short, we've already taken out the bottom edge. So we need to adjust our target price to the next bottom edge price, which is now here. Now, obviously, all the way through this process, we're assessing whether we believe the commercials may become buyers at some stage into the bottom edge swings. So obviously we get a chance to start selling into this here, and obviously we do take out the bottom edge, and that's obviously another opportunity for us to go, thank you very much, so we'll book some more profits here. When we take out the bottom edge, that's now the London session lows. As a bond trader, we're now looking at that London session low and saying, right, we've now got the London session low price. That's now a target price. Well, if that's now a target price, what else is a target price now at this stage? Well, you'd probably also agree that the target price is also this 31 at the top edge. Whether you're bullish or whether you're bearish, these are the two target prices. So if I see a value change, say we get a value changing to bullish, I know my target is going to be 1531. Pretty obvious. So what am I going to try and do? I'm going to try and buy up to 1531. Now, why might that be the case? Well, because if I'm a commercial buyer, let's assume you've been accumulating off the 15.5s. The only place I'm going to find enough buyers at higher prices is day highs, session highs. It's the only place. Maybe there's a wholesale price setting somewhere in the middle of it that might give us a different view on this, but that's a different question. VWAP's going to be one of those locations, wholesale price levels, but that's beyond the conversation at this point. All we're trying to do is draw in the day high and the low. I didn't think that was terribly challenging. So when we then see this, we can obviously see what ultimately happens to bonds. You can see that they then have this sell side opportunity. And you can see that as we run into this liquidity here, there was maybe an opportunity to go short into that, maybe. Still sell side bias, isn't it? Still sell side bias. And then you can see we had some more liquidity there. And then there was another opportunity to go short. Again, sell side bias. Can we all agree this is a lower hold? Can we all look at that and say, yep, it's definitely a lower hold? And can we all agree that the target price is 1512? We can all agree that we can draw a line off the session lows. So we can recognize that that's a great place to look for a target price. Now, when it takes out the target price, we're going to be asking another question. What's it going to do down here? Is it a buy on the break to the 60s? Now, you maybe remember my conversation from earlier. And my conversation from earlier was that I would be keen to buy this at 2s. So I was looking at that swing low at 6s. We says, right, maybe a drop down into the 4s, the 2s, the 0s would be a really, really nice trade. We saw that the session low had dropped down now to the 6s. So obviously that's now a possibility that we might be watching for. A possible break of that into an accumulation long might be a thing. And somebody decided they wanted it more than I did. And somebody came in and look at exactly where they took the price to. Do you see it? So somebody came in, the price went up, the price went down, somebody started to buy into the 8s and the 9s and the 10s. Somebody came in and started to mop up all the loose change in this area here. And obviously on the basis that they love the buy trade, what is their target price? It's the same as your target price. It's going to be 31. It's going to be 116s. So when you're looking at that, you're already aware that this trade is aiming for that price there, isn't it? Now, if you want to be selling this, that's also a price that you're going to be very keen on as a short seller. So if you like the idea of getting short into this as a storyline here, maybe there's an opportunity for you to sell, just the same way as maybe a break of 6s was a great opportunity to buy into the bottom edges. And then you see what happened next. The price went all the way back down to the bottom edge again. You couldn't make it up, could you? Couldn't make it up. Give me 60 seconds, guys. 60 seconds. Just got to take this.
Did Ray have to step away for a second? I had a call. My mom called. Got to take those calls from your mom. And I noticed that Ray's not speaking.
Okay, so when we see these ideas, the idea forms from a simple opinion about where the market directionality is. We could look at gilts, for example, and one of the things you'll probably notice with the gilts market is that the gilts market was very, very keen on buying into bottom edge liquidity. So as that bottom edge liquidity started to appear from this point onwards against the gilts market, you may well have been very interested in starting to buy into this as a storyline. Looking at it from a Japanese yen perspective, you can see that there was ample opportunity to sell some bonds, but there's also ample opportunity to buy, but there's a massive opportunity to sell into swing highs up here with an idea that targeting into bottom edges would make a lot of sense and still makes a wee bit of sense at the moment. In other words, we're always watching and we're always recalibrating whether we have or whether we haven't got an opportunity. An example today would be, Bitcoin. You might have noticed it yourself. You might have seen it, and you may have seen my tweet. So, what did I tell you to do on Bitcoin today, guys? What was my play on Bitcoin? Well, I told you to be careful. It's back on a sell side opportunity, right? So we're back on sell side opportunity. So let me just show you the tweet. Let's think about how you would have played this one. So here's my call on Bitcoin. It was similar to the day before. So crypto, care, top lines again, top lines, guys, 2 hours ago. Okay. So 2 hours ago, 2 o'clock, right? So at 2 o'clock, I'm now telling you to be aware of Bitcoin. So what am I going to do? I have what? What have I now got on Bitcoin? Any ideas? I've now got a target price. Where's my target price? I've got a target price right there, correct? If I look in the background, you can see that I also have some overnight liquidity areas where we have this little target price perhaps here. We've also got some more overnight liquidity areas where we might be able to target on a macro chart, but we're starting to get into kind of almost crash territory here. So I'm aware of it. I'm aware of where we are. And obviously in the meantime, I now have to find a way to target that price. So how am I going to target that price if I look at Bitcoin? Well, there's a couple of ways already I'm seeing. And this is now at 2 o'clock, of course. You can see that this is now 2 o'clock coming in here. So what I'm doing is I'm coming up into this short-term liquidity. You can see that this is a short-term liquidity area in its own right. So I am already starting to sell this product. I also have some top edge liquidity here that I could look at as a possibility, but now I'm looking for plays to stay short, right? This is now tweeted out. We've now got the storyline. We're now looking to be short this crypto and seeing how it does. As the day begins, we then get a little sweep following my tweet, which was really usable because that gave us that extra high price to start working again into just there. So I'm sure a lot of you piled in at that stage because there seems as if there was a big response to that trade there. And obviously what happened was we got that very toxic response. And you can see that that's just 19 minutes after the sell came in. So what happened next? Well, you can see what happened next. We went into that same liquidity. Top lines, care warning, same top edge liquidity, isn't it? Same top edge liquidity. So now we've taken out the bottom edge there, so you've got to be careful. So we know that that was a very fast reversal off the original liquidity level there. So that was a very, very fast reversal. We never got any type of lower priced acceptance. So we know that we've got to be mindful of that. And obviously what happens next, we can see what happens to Bitcoin today. It runs all the way off our sell side accumulations, and it's gone all the way down through the bottom edges here and into pockets of liquidity that we had already targeted into during that period down here. So that's beautiful, isn't it? Considering that this was called way in advance at 2 o'clock, and the breakdown never really took place until 3:15, I think that's bloody good. So a very easy play again for thousands and thousands and thousands of dollars, but again, a very easy play to think about in terms of just seeing what the data is and then reacting to the opportunity. I want to take a look at the Nasdaq from the day before, because there's a couple of really nice ideas coming in from the Nasdaq. So if I look at the Nasdaq, today wasn't as clean. Today was a bit ugly, to be honest. But if I look at the Nasdaq from Friday's market, it's a very good example of what we're thinking about when we're coming into, for example, a new day. So let's get rid of the price of vols for the time being, and we'll see how we get on with this. Okay, so when you come into a day like the Nasdaq is here, we're obviously just stepping into this day here, which is Friday. And we're going to be looking at this as a background view of swing highs and lows. Same thing happens. We start out with where the highs are, key highs. These are where we find things like dealer keys, but we also very simply find market structure. So there's a key high there. We could agree that this is a very important key high here. We had a key low here, which was day session lows, and then we put in an overnight low down here. Now, what happened in the overnight low? Well, it went bid, and then it came back in again, and you can see that we've got an overnight high at this price here at this stage. There's your overnight high. So these are your key levels. Now, what are we going to do with key levels? Target them. But what are we going to target? How are we going to target them? Well, there's one of two ways. We see what the price action is doing. We figure out what the commercials are doing to get there. If we can figure that out, we're going to join in the party. If we can't figure that out, we could add in a value line and try and figure it out from the value itself. So let's take a look. So we come into the cash open, and if you look at the value line, which in this case is this is the Warren line, for example, right? So what's the Warren line doing? What's your first gut feeling about this? You've got your overnight highs, which is here. You've got your US key liquidities, which are here and here. So Warren comes in and Warren starts doing what? Buying or selling? It's pretty obvious. Warren is a big buyer today, right? So if Warren is now buying, what are you going to try and do? Well, I'm going to try and buy into this as a storyline, right? I'm going to try and find some liquidity to pay for, right? So we start looking. Now, depending upon how aggressively bullish you believe the market is, there's liquidity there already, isn't there? A little pocket of liquidity there. We've obviously able to then look at this liquidity here and say we've got overnight liquidity down there. We can obviously look at some little pockets of liquidity in the overnight session. The idea is that we do not think they're going to take us all the way down to day session lows. The day session lows, overnight lows, quite a distance away at that stage. The overnight lows are miles away, so maybe this is possible, but it's unlikely. But at least we know where it is. So my job is that I've now got a destination. My job is that I now have a very obvious destination. I've got this liquidity here. So I have a destination for the buy trade at this liquidity here, and I've also got a destination with this liquidity here. So I now have the destinations to start with. If I know where the destination is, it's like planning a holiday trip, isn't it? Your holiday begins with an idea, let's go to the Maldives. Brilliant. So you decide to go to the Maldives. first thing you're going to do is try and figure out how the hell am I going to get there. You start looking at the dates, you start looking at the flights, you start looking at everything else, right? So you've decided where you're going. So this morning in the S&P here, or the Nasdaq here, if you're looking at that point, you've decided where you're going to be going. Now you're going to try and figure out, how do I get to that point? We start looking into these little pockets of liquidity. We start asking whether we've got enough or whether we haven't. We think because this is the cash open, maybe they're going to take it down to get some liquidity. It would seem reasonable. Short term, very bullish. Then it goes bearish, and you say, okay, don't like it yet. Don't like the idea at that stage. Maybe I've changed my mind. Maybe the value has dropped enough that I'm now thinking the market's sell side, and then it turns around very quickly off the bottom edge liquidity. And my original feeling is the buy is back in play. I don't know where the buy is going to go to, because interestingly enough, we've also now put in a day session high right there, which also provides us with a destination should the market be bullish. Well, the market is bullish. The value is bullish. So whether you like it or whether you don't like it, that's what's happening. So your job is to be on board for the journey to that target price. If the value change, you might be able to then sell into that target price. If it doesn't, we're going to be looking to go any further. As the price then trades up into that area, the value stayed bullish. And obviously, as the value stayed bullish, you're now looking at it saying, okay, we're going to go to the next target price, which is now potentially this guy here. Should be easy, shouldn't it? Look at the value. So if I now have a target price, what's my question? How am I going to get there? How do I get to that target price? And I start looking at pockets of liquidity. Did anybody see a pocket of liquidity to maybe tap into there? Sure. So there would have been a possible tap into a pocket there. We could have looked at getting some liquidity maybe here. We could have looked at getting back into this big toxic area here. So the next trade would have been to try maybe and get all the way down into that price. Pick up some nice liquidity into this area here would be beautiful. So we've now got 3 possible entry points, 3 trades where we can start looking at leans or reversals or Heisman type trades. And obviously the one that did kick off was, of course, this one here. Very, very shortly afterwards, we now take out the second target price. Now that we've taken the second target price out, the question is, do I want to keep this destination narrative going? Do I want to take another leg to somewhere else, somewhere nice? And the answer at that stage is probably absolutely. In relative value terms, this is now making a significant higher high, and this is holding a right-hand hold at the highs. As we go forward, you can see that the value then changes. Now, this is the difference between you guys and everybody else that kind of considers this as a process. It's quite obvious that the idea of hitting that target price, which is way up here, is probably now not going to be realized. You originally thought you were going to go for a 2350 level. You thought that looked like a great opportunity. And to be fair, it did look like a great opportunity, but things change. So now what are you going to be doing? Well, when that value doubles back, what am I now thinking to myself? I'm now thinking to myself, okay, I've got a change, quite a strong change in value here. Where am I going to be taking this price to? So the first thing that's automatically going to come to mind would be, of course, I'm going to take it down to day session lows here. Right? That would be reasonable at this stage to start coming up with that target price. So we now have a target price here. We've now got an idea about what might develop as a commercial. Now, we don't know if that's even going to be close. We don't know how it's going to evolve. But we're never going to know how it's going to evolve until it evolves, Theo. We can't guess about it evolving the way we want it. We can only see what happens next. So what happened? Well, we've got to think about how we're going to get to that price. Pretty reasonable, right? So because we're in today's session highs, we know that there is one of 2 things we can do. We can either be the passive guy at the top edge, or perhaps we can wait maybe for a break of structure and then try and play into this. right? It's only 2 trade opportunities. I don't want to sit somewhere half-baked in the middle. I want to either play it as a top line. So in other words, I don't want to trade it in here. That doesn't seem to make a lot of sense. I want to trade it here. Or I want to trade it once I know that these buyers have get taken off the numbers. So these are the 2 locations I'm going to be thinking about getting my short play into the market. Depending upon your view of value, depending upon your view of everything else, that seems to be reasonable. As the price then takes its shape, you can see that we get a nice little break of that structure. And now we're looking at that and saying, okay, well, we've got the good trade on. What about trying to get a momentum trade? We're looking at maybe pullbacks. We're looking at the break. We're maybe looking at pullbacks. There's plenty of opportunities to play into this. We just never got maybe the kind of liquidity we'd have liked. But look at the volume collapsing. It's going to be difficult to see any liquidity getting taken. So where are we targeting? Well, we're still targeting the same price. We know that the buyers, the last successful buyers, came from this area here at the moment. So we've got to be aware that this might be a bit of a challenge on the way down. So this could be a liquidity grabbing opportunity, a profit taking opportunity, just into this liquidity pot here, couldn't it? These buyers were successful. They were us. We were those buyers. So the price does what? Well, again, we watch the value, still looks good. The value then turns on us and we go, oh, that's not so good. Not so good when the value turns, but still no particular trade here. So we pick up the liquidity and we run the stops into the bottom edge here. But look at the value, guys. See it? So do we think at this stage that our target price here is on point? Does that look like a great target price? No, it looks rubbish, doesn't it? So we're going to use that liquidity there and know that that's going to be good enough. If you see the value starting to go bullish again, it brings back that same conversation. Where am I going to trade this to? And as a result of the overnight session highs now being here, sorry, the day session highs now being here, that's now my target price. Do you see how this keeps you on point about where you're going to be looking for as far as aiming target price areas and all these things? How am I going to get to that price? How am I going to pick up some sellers so that I can get to that target price? Well, that's my choice again. I've obviously got a baseline here at 61s that I could wait to break, which happened over here. Then we sold it. Or I could try and fade into this as the market broke here. I could say, right, I'm going to try and find a lean. I'm going to try and take a shot. I'm going to try and lean on something down into this area. Maybe I can take a shot at this point. As the price comes back up and we tap this structure here, you can see that we then come back into this toxic buy side. There's a very strong buy there. It takes out that little top edge. And there's a great opportunity maybe for you to step in and say, right, now I've got a great opportunity here. So I've called a 56 pullback. At that stage, we're now aiming for this target price here. That's our target price. That's everybody's target price. And as we get towards that target price, do we see the value coming out? Yes, we do. And do we take a little outcome right there? It's beautiful. Absolutely stunning, isn't it? But did you all have the same target price by doing this process? Yes, everybody had the same target price. Everybody had the same basic understanding of this. We recognized the toxic buyer coming in from here. So we knew that when we saw that toxic buyer, that this target price was on. If we didn't see the toxic buyer, even if the value was bullish, we would certainly still have some questions to answer. Certainly, we'd still have some ideas that maybe need to be a wee bit more reinforced. But when we see this very toxic pop here, this slow candle pullback here, we know that when the value goes bullish here, we are going to this target. It's session highs. It's the first target we've got. It's the perfect target. And what happens next? Well, of course, you can see that we then have a pullback from the session highs, and then the value goes back bullish again. So what are we thinking? Well, what I'm thinking at that stage is, well, if that's session highs, we're going to go back to session highs again at that point, right? So my question, Ulrich, is how am I going to get there? I'm now looking at the liquidity at the bottom here and saying, well, maybe I want to tap that liquidity there. Maybe I want to try and grab a little short at it at this point. Seems reasonable. I know where my target is. I know where the price is going to. So my job of trying to get into this to see if I can get there, well, if I have a journey destination, then all I've got to try and do is take part in the journey now, right? So what happens is that we run some stops at the liquidity level here. Perfect. So we got a failed auction here technically, so we want to make sure we get that liquidity. So there's another opportunity to step in again. Value still looks good, so this is still my target price at this point, day session highs. So what happens next? Nothing much happens, right? We start running up into the top edges. We come down. I'm looking at the value and I'm saying, what the hell? Why are we not getting this? This is getting a little bit interesting. And then we get a bit of short-term sell-side pressure coming in, and then we get our target price. Short-term sell-side pressure. The value is still going up. So maybe it was enough to put you off taking any more buy trades, but it's certainly not enough to get you sell-side. And then we get our target price. And what happened at the target price? We lost a lot of our sell-side value or buy-side value, didn't we? So what happens? We lost our buy-side value. So what are we going to try and do? Well, we're going to start thinking about the possibility that if we've lost our buy-side value into a macro trade level, maybe, if you like it, maybe we can target day session lows now. You might say, what? It's a starting point, not a finishing point. So if I now look at that and say, right, from this point, I'm now looking at that as my target price from these liquidity levels, sure. So I've now got this target price down here, and what am I going to try and do? I'm going to try and figure out how to get there. Well, there's one or two ways I can get there. I can start fading into the top edges, or I can wait for a break of market hold in one of these areas here, and then try and join in if I like it. So we broke, for example, this liquidity here. We came back up. You could say, well, I'm going to sell into that. Maybe. Value is okay to do it, that's for sure. And then you're going to be looking at that and saying, right, well, worst case scenario, the last successful buyer that broke structure here, you could say, well, was this guy here, right? Does everybody see how I come up with this guy here? Because that was the previous high, and that's the new high, and that's the lowest price in between those two areas. So that's going to be the liquidity that might just turn the price against me. As the price then trades to that liquidity almost to the tick, you can see that there seems to be a buy response popping clean right off that level. Not a surprise. If anybody's ever used these levels before, you'll probably know just exactly how these levels can become a little bit frighteningly good. So it pops clean off that trade level there, and obviously it runs back up. And again, you see that sell side divergence creeping in. So with that sell side divergence, you now have another idea. Well, we've still got the same downside storyline here. We've still got this guy down here saying, well, that's still your target, mate. You know, so if you were bullish here, this would be your target, wouldn't it? Well, you weren't bullish here. The value wasn't bullish. The value is bearish, so you're not bullish. So we come back up into the top edge. I have a target price at the bottom. I say, how am I going to get there? And the trade then sets up into this level 2 liquidity here. We're now looking at this as a capper, probably sitting in the price levels here. We watch our time, for example, 1945. We've still got a good hour 15 to take a trade. And what happens next? The price absolutely collapses. And we get a very nice ride out of town here. We're now running out of time. And obviously we've ran into that same liquidity. I don't think anybody's going to not take the chance of getting some cash out at that stage. The value was divergent when it took out that liquidity. On the way back up, we can see that we've now had a very strong sell-off. We've now got a great technical level here. And if the value drops off, we can now look at that technical and say, how do I get into this? Because I'm still aiming for the same target price. This hasn't changed. It's not bullish. So therefore, we're aiming for day session lows. We're always aiming for day session lows or day session highs, always. So I'm going to look at that and say, how do I get there? I'm going to try and work sell side. That's how I'm going to get there. And as we start working sell side, we can see that that didn't really work out brilliantly, did it? And then we get into the cash close and we say, right, is that us finished? And at that stage, of course, what happened was it then opened gap down the next day, but that's not part of this exercise. So when you look back at the trades that you could have taken, targeting day session highs and day session lows, I think you'll probably agree that by being active and pursuing these liquidity levels as a starting point for your day is pretty easy. It's a pretty easy way to get started, to get going, and to think about it. So as a little exercise, I want you to do oil today. We've done bonds already. We've now done Nasdaq. I want you as a little exercise quickly to do oil. 5-minute chart, 1-minute chart, whatever. Just do oil. So take 30 seconds to do that. It shouldn't take you any longer. And do it against Friday's market, right? So because you've got nothing else at that stage. And then bring it forward into the Brent session. And then bring it forward into the NYMEX session. So 30 seconds, guys.